Hey everyone, and welcome to VLOG8 of Lake Effect Investments. Let me start off with the usual disclosures. This is not investment advice. This is not a recommendation to buy any stocks or to sell any stocks. Rather, it's just discussion and discourse on stock market activity, related economics and dynamics, and the stocks that we have picked here at Lake Effect Investments to see how they're doing. All right. So, starting off with the top line economic news in terms of the reporting that came out this week. On the positive side, we kind of have more of the same. We have continuing GDP growth. So, although a tad bit tepid, I think came down like a few basis points or so. It was like 3.1 or something previously, and now down to 2.8, but still continued growth. And yet at the same time, unemployment actually strengthened, albeit slightly, but headed in a positive direction. And private sector job growth was pretty good in the month of October, ADP says. So that narrative is there, and that's kind of what I think is feeding into these more positive reports around the consumer sentiment. So this is kind of on the positive side, and I think there's also reports that people are now kind of coming off, softening up on the elevated prices narrative. And maybe that's also feeding into more positive sentiment around the future of the economy, or at least the immediate future of the economy. On the not so positive side, the doom and gloom narrative is still pretty much alive, and you almost see it every day. And that is basically because the market just keeps hitting records. So this is Nasdaq. I'll just keep it at the Nasdaq. Last week it did take a bit of a fall. I'll talk about that in a second, but before it did that, it hit yet another record, 18,779 on October 30th. And I think the previous one was kind of over here back in mid-July or so. And now we had another one before seemingly a correction or so. So, yeah, that's, things have been too good for too long, and something's got to happen. The wheels got to turn, the corners got to turn. How can we just kind of keep on going like this year after year after year? And then on top of that, Mr. Buffett, top investor in the world, top investor in history, whatever, his fund has sold out of a lot of stocks and apparently is sitting on a $300 billion cash position. This also makes sense from the perspective of, the record levels of the market is seeing, and that, of course, is being driven by Max 7, and taking some profit is definitely a good idea. And sticking around a while in cash is also okay before you figure out what to do next. This is kind of how Max 7 has been trending over the last 5 years or so. So just the previous 1 year has been a pretty significant uptick as well. So yeah, and he's probably waiting for the election and to see what's going to happen with that before you strategize and structure how you're going to go forward from here. Or maybe you know something that the rest of us don't. So definitely the market is well and alive with tension. And another reason that the market continues to show strength and resilience is that we do have a pretty good earnings season. It looks like that it's going to be overall at this point. Taking a look at this report over here, as of the 31st of October, 289 companies have reported, and 76% of them have beaten estimates, right? So that would be revenue and profitability estimates. And of the 24 missing, these are missing by a median of -4, blah, 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 blah. And then they also have a breakdown here in terms of different segments of the market, different industries, and how they're doing. But overall, 76% of corporate earnings so far is a beat. So that is definitely a good thing and playing into the strength and resilience of the stock market. Okay, so the Nasdaq, right after hitting that record level, took a bit of a dive, and interestingly, almost all of this, it so appears, is driven by Max 7 and within Max 7. So as you can see, very similar signature, right? For overall Nasdaq, and definitely Max 7 can do that. It can influence the entire index. And even within that, um, really the ones that kind of drove that was meta platforms, right? So Facebook and Microsoft. For Microsoft, it was kind of the storyline was a bit of a pullback in the cloud computing business, which has been super high growth the last few years. And, the market took that as something that to be concerned about. And on the side of Facebook, it's even more mysterious. I really don't know how to, um, what to put the finger on, but at least the news narratives were pointing towards higher capital expenditure, higher spend guidance for 2025, which is obviously going to be expense and maybe the absence of how revenue is going to be generated um, as a result of those capital expenditures and when exactly that's going to happen. So I don't think these kind of short-term price movements are that meaningful anyways. And I'm always are weary of off-the-cuff quick fire narratives and explanations of why this is happening. So still very short term, just a few days. Yes, it is 3Q earnings seasons and everything, but I would not read too much into it. So overall, a bit of a correction for Nasdaq, but also while being on the subject of Meta and Microsoft, as well as NVIDIA. I guess any conversation these days is not really complete without NVIDIA. And NVIDIA did have a good earnings report. So I think they slightly beat expectations on revenue and profit guidance. And you kind of see this again, very short-term price movements and small price movements. Um, Still worth billions and billions when you're looking at a total valuation of 3.4 trillion. But I think this was a bit of a sell-off before the earnings was released, traders shoring up their positions, and then afterwards it kind of just sort of normalized. But um, Meta and Microsoft did issue some guidance around their capital expenditures for 2025, which is pretty interesting. And I think that's going to play more into the tension, with the positives and the negatives. Are we in a good place? Are we in a bad place? You've got the AI driven boom versus the narratives that, growth is driven by consumer borrowing, consumer debt, and growth is also driven by government debt. And both of these are not sustainable in the long term, right? But where exactly will that happen? When exactly will that happen? And government debt, I know that 35 trillion debt number gets talked about a lot, but it's not as easy to comprehend, to unravel as I think some would like to think. Maybe we do a vlog of that at some point in the future. But anyways, as far as the capital expenditure guidance goes from these companies, that's very interesting. I think it's pointing towards elevated spending on building out the AI infrastructure in 2025, which makes sense. It's early days where the whole ChatGPT 4 explosion happened this very year. So having a couple of years of elevated spending to build out infrastructure is probably a normal thing. So I don't think that tension is going to die away anytime soon. But let's see what Mr. Parkev Tatevosian, CFA stock commentator, has to say about that.
So the Wall Street Journal today had an interesting article that's talking about precisely what I was saying in the introduction here. They highlighted that Microsoft has already spent $53 billion this year, which represents about 28% of the company's revenue. And this is on capital expenditure. And Microsoft has averaged 12% of revenue on CapEx. So they've more than doubled their capital expenditure compared to their revenue in the last year. Moving on, they say Meta plans to spend $39 billion on CapEx this year, which would be about 24% of its revenue this year, when this company had averaged about 19% of revenue. And it's true. If I share with you Meta Platform's latest quarterly earnings release, which came out after the markets closed yesterday, October 30th, you'll see that capital expenditures for the full year in 2024 are expected to be in the range of 38 to 40 billion. That's up from the previous range of 37 to 40 billion. So they increased the bottom end of the range by at least 1 billion. And then they also say that they expect capital expenditures to increase significantly in 2025.
Okay, so let's move on and take a look at our portfolio. So doing pretty well here, I think. 15.2% already, as we kind of get close to a 60-day average on this portfolio, with our star performer being Butterfly Networks International, which is at about 104% appreciation, followed by Akebia Therapeutics, and then let's just stick to the biotech space for now. That's that red box that you see up there. And I'm going to talk about ARDX in this vlog because they just did their third quarter earnings report last week. Butterfly did as well, but I've already done a deep dive vlog, if you can call it a deep dive, on this, and it's pretty much the same story. Strong earnings growth that's driving the stock. So I'm not going to do another one again for this round of the earnings season, but we'll do for definitely for ARDX and Akebia Therapeutics. Also because these two have a different profile than Butterfly and BNGO, which is Bio-Nanogenomics. Those two guys are working on a product. Butterfly does handheld ultrasound devices, and Bio-Nanogenomics is developing optical genome mapping, which is apparently a better way to map the genome and to bring it into treatments for patients. But ARDX and Akebia is sort of a drug to market cycle, as I would call it. And this is a learning curve for me as well, as I look into these companies and into these stocks and into this product cycle with drug to market. I'm learning a lot about how this happens as well. So just like overall with these stock profiles that I've talked about before, they tend to be going after niche technologies and breaking technologies. And the idea is to kind of incubate these kinds of entities into their own company, small startup, but a lot of capital will be thrown at it. It's going to have some major players and a lot of talent that is running the company, as also developing the products within the company. And the idea is to kind of do that whole incubator type of philosophy, psychology, that in that environment, the company will be shielded from any shocks and disruptions from a major corporation that could derail its efforts or distract its efforts. And so it's just best to kind of have them sit on their own, onto the side, and work their talents with minimum possible disruption. And hopefully that comes to market. And then at some point they can get acquired or they can scale up themselves and have large money thrown at them for commercializing the drug and to bring it to market and to bring it to big distribution. Anyway, that's kind of the general outlook with this stuff. Of course, there's going to be differences and nuances as you kind of go through this. So, kind of having said that, let's go ahead and take a closer look at ARDX. Before we dive into ARDX, just a quick case in point with this whole drug to market cycle. Um, let me show you guys a company that kind of made a splash last week. So this Summit Therapeutics. So trading at $20, worth 15 billion, which is 12x times what ARDX is worth. And ARDX now does about almost close to 100 million in revenue a quarter. And this company has zero revenue, right? But the reason it's being valued the way it um, is because it's involved in research and development of a drug that could be a potential rival for one of the major global drugs in cancer treatments and cancer therapies. And this drug has displayed some initial very encouraging signs during its initial trials and tests and development phases. And just by looking at the global sales revenue of the drug, I believe it's by Pfizer. Um, that drug has like a global sales volume of something like 25 billion. And this drug shows some better results than that one. So they have strong prospects in terms of replacing that in the market. And given that, the market is giving it a very serious valuation, um, given its prospects. So, but zero revenue, and we're not even sure when revenue is going to show up. But yeah, but that's kind of how this works, and these kinds of companies, these kinds of launches, and these kinds of situations where you have a lot of prospect and not even any revenue on the books as yet is not uncommon. All right, it's not uncommon. I don't think it's uncommon in the drug to market world either. Okay, all right, let's go back to ARDX. So AirDX has been around for a while, right? So it's not new. It's been there. I wouldn't look at these previous price levels because we just don't know what's happened with stock dilution and some other things. So even looking at recent history, um, it's been around for a while. It's been going through these clinical trials and developing its drugs. And as you can see, it's definitely a volatile stock. And I'll talk about this, not this piece here, but I think this piece over here that kind of happened recently. And with these companies, once they come across some good results in their research and development, they tend to do pretty well as stocks. And if there are rejections, poor results, or FDA rejections, they tend to do very badly. So volatility is definitely a feature with these stocks. But AirDX has come a long way. It's got a couple of pretty good drugs now on the market, doing very well. So it's definitely much further along the curve. Um, Tenapanor or Ibsrela is a irritable bowel syndrome treatment drug. So basically constipation, stomach pains, that kind of stuff. And Foza, which is causing some ripples and complications with the stock, I think, is a treatment for chronic kidney disease for patients that are on dialysis, but it's an oral treatment, and I think that's kind of the um, the novelty with this drug, and also has shown some pretty encouraging results vis-a-vis current therapies. So it's picking up some very good sales too. And if you look at say, take a quick look at the results for 3Q. Yeah. Isbarella is at 40 million and Foza sales are at 52 million. So a pretty good profile for both of these drugs. And then if you want to look at kind of the growth levels, so almost at 100 million a quarter in sales and very, very strong growth trajectory on top of that. And also net income. They're almost net income positive, which is a really big deal. I think they came out to about 0.01 cent loss, 1 cent loss per share, or something really tiny like that. So that's also a pretty big deal as well. But given those facts, the performance of the stock has been a little bit disappointing because its fundamentals do look pretty strong. And I think that has to do with the complications and the nuances of the US healthcare system, the insurance system, the reimbursement system, and the legal system as well. So, a little bit of backdrop on what happened with the stock, because I've been watching it for about, I don't know, almost a year or so now. And that is this big drop over here. Um, what caused that was an announcement by ARDX that they're not going to apply to bundle FOSA with CMS, which is the Center for Medicare and Medicaid Services. And so, since a lot of dialysis patients tend to be coming through Medicare or Medicaid, that's obviously going to have a big role. And the reason why they would not bundle this drug with CMS or somehow within the structure of CMS. So this is a science, a field to itself. As laymen, as investors, we can't really expect ourselves to dig really that deep and to understand the nuances that well. But keeping some kind of a radar on it, it appears that the stock is being primed for an acquisition. And somehow that acquisition dynamics around those acquisitions don't work well if the drug does get bundled um, into how CMS, how it would have if they had applied for, if they had kept their application up for CMS. So they decided to withdraw it, whereas previously they had given the guidance that they would do it. And that also prompted a lawsuit. So adding a further complication, right? And then there's something called the Patient Kidney Act, which is also very tied up with the dynamics of CMS and how Medicare and Medicaid budgets, pays, and reimburses for these drugs. And this, the the patient, the Kidney Patient Act is supposedly going to help the cause for ARDX to get these drugs to be structured into the overall healthcare system and through CMS as well. And I think provide some interim budgetary reliefs for it to be able to get to its patients because the drug is seen to have positive impact with a lot of patients with chronic kidney disease. So it's quite a lot to unpack. It's quite a lot to digest and also just to understand as well. You've got this going on. You've got the bundling conversation going on. You've got that court case going on, and I think it's making investors, especially people like ourselves, like myself, who are not going to be able to understand this stuff too well, and maybe not able to size up the risks around it too well as well, to stay either to stay away from the stock or to you know hold it for the long term, which is what we're doing over here. So I would say, given the fundamentals of the stock, given that it's doing very well, and also given the management virtuoso around this stuff, so the management is basically executing on their plan and they're excited about it and they're actually putting out statements like this that we have the ability to basically put up a plan to execute it and to deliver on it and to show you the results as well, and that points towards a good future. So I think that does hold water. It's good fundamentals. The overall financial trajectory of the company seems to be strong. It has good fundamentals. Yes, I think it has to navigate these pretty muddy waters with legislation, with insurance, with CMS, with the overall healthcare system. But in some sense, it should be able to do that over the longer term. And that's kind of the view that I think one needs to have with a stock like ARDX. So with that, I'm going to play a short video. by supposedly an investment, an insider. Gentleman looks like a biopharma professional as well. He's got a YouTube channel where he covers these kinds of stocks. And I think what he's saying over here tends to make sense. But anyways, let's go ahead and see what he has to say. This one here.
So who is Mike Robb? And why I'm asking this question, because I see a lot of things on StockTwits. It's like, well, Mike Robb wants to retire, so they're going to sell. Okay. Or Mike Robb is taking a stand. Mike Robb is a CEO. That's a chief executive officer. He has, what, 3 million, 4 million, maybe 6 million shares of a 255 or 250 million total number of shares available, including restricted and issued. So Mike is a CEO with a relatively low financial stake. He is not the person who makes the big decisions. He's the person who executes on the big decisions. The board makes the big decisions. And the board is run by David Mott. Who is David Mott? If you don't know who David Mott is, I think you need to seriously consider whether or not you should be investing in biotech. So he is a private investor through Mott Family Capital. This is big money going back a long time, billions and billions of dollars. Their family was involved in General Motors when cars were first just coming off the assembly line. They have been around for a long time. David Mott is probably, in terms of launching pharmaceutical companies, small pharma, and getting it sold and getting drugs to the market and all this stuff, he's probably the most successful person in history at doing this. He's been involved in, if you can see this, 40 billion in corporate acquisitions. He has been starting companies and selling them to larger companies for over 25 years now. So MedImmune was one of his. Right now he is chairman of the board or sits on boards for Aptimmune, ARDX, Epizyme, Amara, Mersana, Novavax. That's probably not all of them. I know that he's been involved in, I have, well, I'm not going to get into my connections, but I've seen companies that he's built and sold and how they go. So when people say, well, this is a company that should be held and grow into a big pharma, this is a person, David Mott owns or has investments in a portfolio of companies, and the direction that he tends to go is he gets it launched, he gets it to a point, and they get acquired if that's the best thing for it. I think that people are overlooking what Mike Robb's position. I think he's a great CEO. I think he's an incredible CEO. But the board are the people who own it. They have the investment. They put the money up. They're the ones who will lose a lot if it doesn't do what it has to do. Mike Robb is the person who executes on what they have to accomplish, what the board determines has to be accomplished. And he's an incredible CEO. But I believe that at the end of the day, the direction comes from someone like David Mott. And I think David Mott, if you look historically, he launches the companies, he gets them going, he gets these drugs out, and many great drugs have come from this person's efforts. I mean, this is incredible. This is an incredible combination, by the way, between Mike Robb and David Mott. And I think that they're looking to be acquired. But I don't think they can be acquired if bundling started on 1 January, which is part of why Mike Robb has to take this role. He has to take this position, which is the CEO has to say, we're not going to roll in this. We're not going to allow it to go forward because it's going to kill. If bundling were to start 1 January 2025 and they were into TDAPA, it's going to kill all the other things that they have going on. I think what they have going on is an acquisition. And I believe the reason it's taking so long is because there is, I didn't finish writing this, we're in this position right now of a market where so long as the Fed keeps interest rates high, the market has this play that it can run over and over again of constantly dumping things and buying more shares and accumulating. So it's a 2-year-long accumulation by big money, smart money that is helped by the Fed policy. And actually, the Fed wants that to happen. Once that changes and you see the policy shift, which should happen, I believe, at the end of the year into January, into 2025, that's when the acquisitions are going to go through. That's when everybody's going to start buying because 2025, 26, 27 is where the markups happen. That's where all of these shares that they bought for the last 2 years at bargain basement prices of the best possible companies, they start marking it up, and now that's when it's going to get sold. And there's going to be a lot of money entering into the market, and that'll come from people buying and selling all that stuff. So that's what I think. I didn't sell any shares. I bought some, I think, in the 520 range. I'll probably keep buying more. I don't see this as a problem. I think at the moment the Patient Kidney Act gets passed, which should happen before the end of the year, the moment the election's over, the moment we get the first rate cut, the moment we start to see Q2, Q3, Q4 earnings, all of these things are going to lead to a significant markup on ARDX, and I believe an acquisition will be completed. If it isn't, it'll still get marked up over the next year to 2 years, 3 years, and that's what I think. I think people are a little bit, I think they're worried. I can understand why. But if you're worried because you think it's going to go down the road of a Korsuva, yeah, it's not. Look at the studies. Look at what this drug does. Look at what it does paired with binders. It's not going down that path. You cannot just, our system is not designed to where people can, over the course of $1 billion a year budget, kill people or lead to, not kill them, but lead to their death by restricting them from a drug that is going to have positive impact. And I think that Rob, as a CEO, did the right thing. I actually think that he probably hurt himself a little bit in the sense that if it is acquired, he's probably not going to be the CEO. Maybe, well, I don't know. I have no idea. But I know from corporate politics, he definitely gave a company that is going to acquire it the ability to say, well, you upset CMS. I don't think he upset CMS at all. But I think a lot of the time it's what they can say, not what is true. Anyways, that's what I have to say about it. I see this as a lot of nothing burger, unless if if you're a short-term investor, ARDX is unkind to short-term investors. It's unkind to anybody who's doing anything less than year, 2 year type of thing out, and that's because they have to accommodate institutions. They have to accommodate investors. This is investor-run company. The board is a brilliant board. You have the best people in the world at this, running this company at every level, from what I've seen, which is one of the reasons why I went pretty hard into it, or heavy into it. And that's what I think. Anyways, I went way longer than I thought. I hope this is helpful. Again, none of this is investment advice. This is just what I think. I'll say I have a large position in this company. I've had a large position in it for 2 years now. I really don't worry about it too much. I think they're going to be fine, even if everything went south with Exfosa. Like I said, these companies, they find a drug with high efficacy, high safety, and a broad physiological impact, and then they just look for indication after indication, and they turn it into a portfolio. Tenopreneur is that drug. I think their drug development platform allows for many other drugs like that. They're already doing 2 studies for label expansion and new indications. I think they'll have many more. That's what I think. Anyways, best of luck. I hope this was helpful.
Okay. So, I think what the insider gentleman is saying that, long term, look for a long term play on this, and that's kind of what we're doing over here. I've talked about that many times in the past, that this kind of risk profile with these kind of stocks is best managed over a long term, and hopefully a good entry point on the price level. You can't time the bottom, but definitely have gone over the pricing curve over the last few years. All these stocks were really, really high a couple of years ago. ARDX probably does not fit that profile the most out of the other stocks, but given its own fundamentals. So, we've got a company that has good sales. It's got a couple of products already on the market. It's looking to develop more drugs on its platform. And it's beset by some short-term complications, hopefully short-term. I think what the gentleman's also saying is that it's got the personalities and the profiles that are going to prime this company up, hopefully for an acquisition by Big Pharma. Could be 1Q, 2Q 25, or sometime in 2025, or it could even take up to 2 years to do that. And even if it doesn't, it has good fundamentals. It has strong fundamentals. It's got good drugs, and these drugs have proven to be pretty strong in their clinical trials and their results. And so this gentleman at least thinks that the drugs won't get shelved, or they won't get rejected by legislative measures or by the healthcare system, that we pretty much have to find a way to get these drugs to the patients because they truly are beneficial. So good fundamentals. They're never a guarantee of success, but it's definitely an interesting watch, and a really good learning opportunity as well in the drug to market commercial cycle. All right. So I think we've gone long enough for this session. I'll go ahead and stop now, and hopefully be back with some more good 3Q24 earnings news in the future. And of course, the election is tomorrow night. So see you guys on the other side of the election. Bye-bye.